IIA Oman. I would like to welcome all the participants and speakers for attending this event on behalf of the IIA Oman board. So I will let the floor to Tasmina Al-Balushi to introduce the speaker, and hopefully we will have an enjoyable session and we will learn a lot from this topic. Yes, Ms. Tasmina.
He has a certified information system auditor and has a research master's in engineering science and PhD in research. I'd let him take over now. Please feel free to introduce yourself further and get right into it.
Hello, everyone, and welcome to the session. My name is Mario Bojilov, and I have been working in audit analytics since 1994, so that's over 28 years now. I have been responsible for managing and delivering continuous auditing systems. This is my main area of expertise, continuous auditing. I have also recently completed my PhD research in the area of using artificial intelligence to identify synthetic identity fraud for financial institutions. So basically, my whole career has been spent around analytics, data, and audited risk. And today I would like to share with you some of the things that I have learned over the years, both from my successes and from my failures, which are part of life. This is based on an ebook that I have written. So if you would like to get the ebook, please connect with me on LinkedIn. There's a QR code on every slide in the presentation, which links to my profile. Connect with me, send me a message, and I'll be happy to provide the book. So let me just share my screen. Could you please make me a co-host so that I can share the screen?
Yes, sure. Just give me 1 minute.
Yep, sure.
Does that work?
Just a second, let me see. No, we should be good. Can you see my screen well?
Yes, we can see the screen.
Cool. All right, so just rearrange this. Okay, so today we'll be talking about audit analytics and some of the things that make it work or not work. This is definitely not a technical session. We're not going to be going into specifics of how to do things. This is more about what we're doing and why we're doing it, and what can we do in order to make it more accepted across the organization. So what we'll be talking today, these are the topics that I'll cover in the session: people, goals, tools, consistency, the business side of things, communicating with the business, what are some of the financial benefits of analytics, how to actually show the business users what's going on, what are the total benefits, why do we need to focus the resources, something to say about simple versus complex analysis, and then we'll talk about winners and losers in analytics. Okay, so the first point about making analytics works is to get people in the audit team who are interested in digital technology, who are interested in data, who actually want to do data analytics. Not everybody is. Based on my personal experience, working as an auditor, managing audit teams, working as an external consultant, Majority of the people are not interested in dealing with analytics. There is a number of reasons for that. I think that the main one being fear of failure, fear that they don't understand it, and fear of losing face. So while this is not the case, and personally I think that about 80% of an audit team can do data analytics, simple data analytics, nevertheless, we need to be realistic and to actually start with people who are interested. These are the people who will be happy to drive forward any analytics initiative. We can get them to do analytics, we can assign them various tasks, and they will do it willingly, as opposed to trying to force somebody to do it who doesn't want to do it. Now, the thing is that once analytics starts getting accepted within the audit team, audit analytics specifically, and it becomes almost business as usual, this is when other people on the team, when they realize that it's not that hard, it's not that scary, they will start getting involved. And ultimately, this is what we want. As having been a manager, having worked with other auditors, personally, I think that most auditors, about 80%, should do some simple analytics. Complex things will be left, of course, for smaller percentage of people who are interested in doing more complex things. But most auditors can do some basic analytics that would increase the overall efficiency of the audit department immensely. The second thing is about the analytical goals. Now, people quite often mistaken data analytics for a technical initiative. Now, just because the word data is there doesn't mean that it's purely focused on technology. Technology is just a tool, and we need to focus on business outcomes. In the audit world, the business goals are usually the terms of reference. So basically, when we are looking at using data analytics in a specific audit, the first thing to do is to review the terms of reference and to see where potentially analytics would fit in. Today, most medium and large organizations rely very heavily on digital technology. So data is in abundance, and data can help a lot of auditors. So we just need to do that, to focus, to think about it this way, and start thinking at the beginning of every audit, what can we do with analytics? Also, and this is something that I keep saying on my courses, at the moment, I'm the lead instructor at MBS Academy. We are focused on digital skills training for non-technical professionals, including auditors. Every time when I run a course and we talk about data analytics, I always say we need to start with the business, we need to end with the business. Data analytics is not about technology. So starting with the business means using the terms of reference and following them and seeing where data audit analytics fits. Ending with the business means that whatever we discover using audit analytics needs to go into the draft and the final report. This is the ultimate goal. So always think about the business side, do not think about the technology. So which brings me to my next point about the tools. We can use a lot of different tools which are available. It depends on the organization, it depends on the skill set. There are organizations that are using, let's say, ACL or Arbutus, its successor. There are other organizations that are using CARDIA, another popular audit tool. And yet there are some organizations which rely on things like Power BI. There are some organizations that rely on Excel. There is a lot of different combinations. So the thing is that we need to be careful of just trying to use the tool for the sake of it, because sometimes Excel can do the job quite well, and we can quickly do whatever we need to do, especially if it's a one-off or some sort of an ad hoc audit engagement. We can use Excel, we can finish our job, we can move on. For things which are more mature, more repetitive, more included within the process, then we can consider the other tools. Of course, if you have specialists in IDEA or ACL, by any means, use those. Most audit teams usually have 1 or 2 people who can use IDEA or ACL really well, simply because they are difficult to learn. They also require specific training, and not everybody on the team has been through the training. My personal favorite tool is KNIME. I've listed here on the slide, KNIME. You can download it from knime.org. It's free for enterprise use. It can do simple things like searching, sorting, certification, but also it can do complex things like data science, big data, and artificial intelligence. And these are things which are coming to audit, because using artificial intelligence, it's possible to do predictive analytics. We can, for example, predict the risk associated with the project at the start of the project, not at the end of the project. This is actually one of the exercises that we do in the artificial intelligence in audit module of one of our courses, because we want to be able to take some proactive action. Knowing what the risk is at the end of the project doesn't really help, because things have already gone bad. Being able to actually assess the risk at the start of the project and do something about it while it's still possible to do with little time or money, it's a much preferred solution. So in relation to the tools, just use whatever is most convenient. Do not follow any fads. Focus on the simple. Excel will do. And the other thing is that if we use simple tools like Excel or KNIME, for example, another one, the thing is that not everybody, but most of the people on the team will be able to do something, because usually for the specialized tools like IDEA or ACL, there is only a handful of licenses in each team, and they are not available to everyone. Neither is the expertise. So just keep that in mind. The other thing is consistency. Okay, one of the big benefits or the big things about consistency is that opportunities to do audit analytics exist in pretty much all of your audits. As I mentioned earlier, all medium to large organizations and government rely very heavily on digital technology. Data is there in abundance, so close to 100% of your audits would benefit from some kind of data analytics. Of course, in some audits there can be a lot of data analytics. In some other audits there can be a little of data analytics, but overall they will add up and improve the results of the audit team. To be consistent, and this is a really difficult one, it takes a little bit of practice. It's not rocket science, but it's more of a habit. We need to develop the habit of thinking about data analytics at the beginning of every new audit. Can we use data analytics when we are starting, after we have reviewed the terms of reference? Can we use data analytics? What can we do? What are some of the things and the objectives of the audit as specified by the terms of reference? The other thing is the data available? Now, just because the data is there in a system and it exists doesn't mean that it's available, because sometimes it can take 2 months to get access to the data that we need. It has happened to me quite often, but actually the audit needs to complete in 20 days. So the data, for all practical intents and purposes, is unavailable for this specific audit. And just as an aside, my personal experience has been that whenever I use audit analytics, or I manage a team that uses audit analytics, it has been the case that 60 to 70% of the time is spent on getting access to the data, extracting the data, and getting it ready for analytics, and only about 30% actually is spent analyzing it. But over time, that process will become easier and easier as an audit team focuses on audit analytics and becomes really data-driven in the true sense of the word. So now, at The outcome of every audit is a set of findings and recommendations that will go to a business area and then need to be actioned by that business area. So as a result, it is really helpful to involve the business at the beginning of the audit when developing analytical routines to be used in the audit. Number one, you need the advice of subject matter experts who understand the process to be able to develop some of these things. But also, it is important that if we involve the business, if we just come to the business, say, okay, we're looking at doing some audit analytics, we're thinking about this, this, and this, can you help us understand how the business process works, and just use a consultative approach, the credibility of any analytics-based findings will increase, because the business was involved. Actually, it is based on their own advice and experiences. It's not like we as auditors spoke to other auditors or read something on the internet or got a course from ISACA or IIA or any other organization and did it based on that information. We actually spoke to the business. So the business will be much more inclined to accept whatever the analytical results say. Also, this type of involvement with the business side will help when eventually we present the draft and the final reports, with the acceptance of the draft and the final reports. Because the business knows that they have been consulted, they have provided input into the analytics that has been done, they have seen what's happening, some of their concerns have been taken into account. Of course, not all concerns, but at least some we can do. And they will be actually much more willing to accept whatever the draft and the final report say. If we don't do that, if we just drop the results of any analytics that we have done, personally, I think that there will be quite a bit of resistance and pushback. That's why I've always been really careful when working as an external consultant doing audits or managing teams that are doing audits for clients, just being very careful to involve the business. The same applies because my main area of activity has been not audits, but implementing continuous auditing systems, which is an even bigger challenge in terms of credibility, because they'll be in the organization for a very, very long time, and the business will need to act and accept their results. It was always really important to involve the business at the beginning so that whatever is developed and goes into the continuous auditing system, they're familiar with, and they can understand it, and they can use the results. Also, it is important to explain very clearly what we are going to do. So get the business to show the business what we're doing, explain it to them in simple business terms, not in audit terms. Business, unlike us, the business doesn't think in terms of risk and assurance and other assurance terms. They think in terms of the business deliverables they are responsible for. So we want to explain them very clearly what to do. Personally, I like to draw some sort of a high-level diagram of the analytics process, including what are the inputs, which data sources we are accessing, and what we're doing, and just some mock outputs at the beginning. And also a list of some tangible benefits, 3 to 5, but just to get the business on our side, show them the benefit of analytics, and get them to be more accepting to what we're trying to achieve. So some examples of benefits. So, okay, so financial benefits. Now, when we do audit analytics, it always brings some sort of a financial benefit to the team and to the organization. It's relatively easy to calculate some of these because we can just have a look at the time that can be saved, multiplied by the hourly rate or the salary of an auditor over a day or half a day and then calculate the financial side of things. So, like, let's say that we do an audit, and if we don't do audit analytics, we just need to take a sample of 25 documents and review them manually. Now, if it takes 12 minutes to review those 25 documents, the total time to do this would be 5 hours. Okay, 12 by 25, 300 minutes. So if we assume $60 hourly rate for an auditor, I'm just using some data from Australian job sites for not a very senior auditor, some auditor in the middle, not junior, not senior. But yeah, okay, so, all right. So if we do that, so we have 5 hours at $60, so we have $300 that will be spent doing a manual review. However, if we use audit analytics and the time taken to develop the analytical routines and running them is about 1.5 hours, let's say, then it will cost at $60, 1.5 hours will cost $90. So then the financial benefit of using data analytics as opposed to doing it manually is 300 minus 90, $210 for one specific review. Now, this is just one task in one audit. In audits, we can automate a lot of manual tasks that are not being automated before. And then when we extrapolate that across the whole audit plan, and however many audits are done during the year, we can actually put a figure on using audit analytics versus not using it. Now, I understand that these are not precise figures. They allow for some kind of, some assumptions, which may or may not be true, but at least we will be within a ballpark, plus minus 10%, but at least we can demonstrate, because otherwise, a lot of people are skeptical, a lot of managers are skeptical. Why should we use audit analytics? Why should we give you the data to do it? Why should we spend the money to get that tool or this tool? Why are you using audit analytics at all? Why don't you just do manual sampling? People are resistant to change. We all are. This is a human trait. But when we can demonstrate a financial benefit like that with some figures which are supported by some calculations that everybody can understand, although they are not, as I said, precise, but nevertheless still close to ballpark, then I think that everybody will be much more on board with any analytical initiatives. I have used it in the past and it has always worked. Very rarely I got a pushback and it was a minor pushback. Are you sure that you're going to say to do it in 1.5 hours and not in 2 hours? Well, no, I'm not. Okay, sometimes I'm happy to basically change some of the figures, but I'm definitely sure that I'll be able to analyze all of the records in a shorter time than actually taking a sample and doing it manually. Also, very useful is to demonstrate the output of analytics. Okay, a picture is worth 1,000 words, as the saying goes. So it's good to help not just the business side, but also other auditors who are not as familiar with analytics to show what are the results. Okay, when we run analytics, we're going to get this, we're going to analyze these data sets, this is what we're going to produce. Usually, when we run with my team analytics engagement for a client, especially for continuous auditing systems, which need to have a much higher buy-in, we'll do some mock-ups, we'll show the business what it is. Actually, my experience has been that specifically with continuous auditing, when it's done well, the business actually gets on board and they'll start using it. Doesn't happen all the time. However, it does happen quite often. So that creates a different additional collaboration between the business and audit. And eventually, some of the audit analytics can be transferred onto business. So in this case, we'll have a real continuous assurance, because we can transfer some of the checks and the tests to the first line of defense, which is the business. And for audit, as the third line of defense, will be left some other more important and more value-adding tests to do. So having demonstrated the output of analytics brings the business on board and also brings the other auditors on board. Now, also we need to think about total benefits. Okay, so it's not just about the money. This money is really important. As a financial benefits, we can save an X amount of dollars, which over the course of a financial year would allow us to maybe save enough time to do 2 additional reviews using the same budget. So we can squeeze something else into the audit plan, or potentially we'll have time left to do some ad hoc work that happens no matter what, but it's not going to throw out all of our other activities in the department. But some of the things to keep in mind also that it's not the financial aspect only. Okay, so when we're using data analytics, we are looking at the complete picture. If we do manual sampling, we never look at the complete picture. With audit analytics, we're looking at the complete picture, 100% of the records. And we can analyze them relatively quickly, and we can see the exceptions, because people talk about sampling and about all these things. Personally, I'm very skeptical. I know what is the mathematical underpinning for the sampling. I'm an engineer. My background is electronics engineering, so I have done several exams of calculus at uni, and statistics was present in some of them. But the point is that as auditors, we're looking at exceptions. So actually using some sort of sampling and getting and hitting the exceptions is very, very unlikely. So we have 1 million records of something. So like, for example, CFO.com, the magazine, they ran some studies and published an article that between 0.8 and 2% of payments in an organization are duplicates. Okay, so for every 1 million payments, we will have between 8 to 20 duplicates. Now, using sampling, what is the chance of getting those, one of those 20, not all 20, but the one of those 20 duplicates? It's not very fair. Now, the thing is that 8 to 20 duplicate payments may not seem high, but we don't know what type of money is involved in every payment, because maybe not all of them will be for $100 or $1,000. Maybe some of them will be for 50,000 or 100,000. Yes, I know there are various controls in place in various accounts payable departments, but no matter what the controls are, the duplicate payments persist. I'm yet to see an accounts payable department or accounts payable manager who tell me, put his hand on his heart and say, Mario, there is not a single duplicate payment that goes through this thing. I've spoken to a lot of people, a lot of accounts payable managers, and all of them say, listen, no matter what we do, there is always something that is missed by the controls, which are in the system, or by the controls that we have put here manually, and some of them just squeeze in. However, using data analytics, it's possible to actually catch every single one of those. So this is something that when we present our findings to the audit committee and our report, and we say we have used data analytics and we have analyzed 100% of the population, whether it's duplicate payments, whether it's invoices, whether it's overtime, no matter what it is, whether it's customer refunds, various other things. The thing is that the confidence, our own confidence, personally, I'm always happy to sign a report, whatever the opinion is, sign a report where we've used data analytics. And when we didn't have data analytics, I'm always a little bit cagey about the whole situation. So that gives me comfort as an auditor or as an audit manager, but it also gives comfort to the audit committee and to the senior managers within the business. I've spoken to a few of them when I'm working as an external party, and all of them are saying, yeah, we feel much better when we know that actually everything has been tested using analytics as opposed to just sampling. So so it is important to to communicate the total benefits. All right. We have an increased level of assurance. Okay, we're looking at the complete picture. There is no sampling here, there is not just here or there, everything. Talking about sampling, there is something that I would like to mention, and that's the fact that sampling is okay in certain situations, and personally, I'm quite happy to run sampling on exceptions. So if we run some sort of analytics and we get not 100 exceptions, but we get 1,000 exceptions, I'm happy to run sampling there. Now, the question then becomes, why do we have so many exceptions? But that's a different conversation. Maybe we need to adjust some of our routines. Actually, this is the first thing that crosses my mind, because if we have too many exceptions, that means either the process is pretty bad or our analytic routines are pretty bad. One of these two. So think about the total benefits and communicate the total benefits. Now, focus the resources. Okay, so it is really difficult to introduce audit analytics to an audit team, simply because it's a new digital technology initiative. There's a lot of resistance in people to do things in a new way. We are all feeling very comfortable doing the things that we have been doing for a very long time. So it's difficult to start. So in this case, it's much better actually, instead of trying to do some sort of a blanket introduction of analytics across everything, and I know of cases where that has failed, that approach, it's much better to focus on one process and then expand to others. So just get a little bit of acceptance, get a little bit of familiarity with analytics within the team and within the business, focus on one thing, and then when you have some runs on the board and there are some wins that you can show, you can then expand to other processes. Like, for example, you can pick any data for, any area for which there is available data. Now, also areas where risk is above average and audits also occur regularly, because when we use analytics in audits that happen regularly, once we develop the analytics, we can just reuse it every time the same audit is run. So if you have audits which are done on an annual basis, they are really good candidates. Now, some examples potentially where you can start are HR/payroll, sales, if you are a private organization, service, procurement, customer interactions and customer management, treasury operations. If you have some really involved treasury operations, I was working as the continuous assurance manager for Business City Council. It's the largest Southern Hemisphere local government authority. It was, at the time, it was 12,000 people. And they had a very sophisticated and complicated treasury function. And actually, we were running some analytics on some continuous auditing analytics on treasury. I spoke to the treasurer. We worked together to develop the audit analysis, and then we were running them. He was actually the first one to receive them. He was actually quite happy to work with us on that. So start with something that is happening regularly, like most audit departments do on HR/payroll audit every 1 to 3 years. Usually that's the frequency. Now, these audits are always front of mind of managers because of the publicity associated with any potential issues, and also because of their impact on the performance of the organization overall. Excuse me. There is also always a system which supports the process. Nobody does manual HR or payroll unless you are 1 or 2 people business anymore. So this makes HR a really good candidate to start with data analytics if you are not doing anything else yet. So as a start, HR/payroll is good. Also, specifically for HR and payroll, there's an added bonus that there's a lot of public information available online through ISACA, through IIA, and you can actually get a lot of ideas from various publications and also talking to a lot of people who are doing it. Another really good area is procurement. So pick one of these two. My personal view is that if it's a government organization, we will focus first on HR/payroll because HR and payroll don't have as much financial loss impact if something goes wrong, let's say fraud or some other errors, but the reputational impact can be pretty bad. If it's a commercial private organization, I'll probably focus on procurement because those organizations can deal with HR issues much better, but the financial issues are much more important. Now, how much money can be lost in payroll fraud? Not much. What can you do? Can you create a couple of ghost employees and pocket their service here? Probably, or can you approve a couple of payments? It's very unlikely that anybody can approve $1 million payment to themselves. Usually we're talking about 100,000 or 200,000 losses per year. Some overtime fraud. I have been involved in overtime fraud discovery using analytics. The overall loss was 300,000. It was for a government organization, so the reputational impact was much bigger issue. But at the same time, think about how much you're paying to various vendors in your organization. So if there is some sort of occupational fraud within accounts payable or some sort of a collusion with external vendors, what's happening there? So basically, sometimes a vendor payment is about $1 million per month. And this is not a very huge vendor, it's a big vendor, but not the biggest, probably. So if somebody can actually just do what they call account flipping, which is a type of fraud, where they substitute the bank account of the vendor just before the payment run with their own bank account and then flip it back to the original one, that will take, they can take $700,000 or $800,000 as opposed to $300,000 from HR. So in private organization, accounts payable is a much bigger concern because of the financial impact. In public organization, HR is a bigger concern and better candidate for analytics because of the reputational impact. Now, the other thing is simple and then complex, okay? So there is no point trying to do complex things at the beginning. I see some questions here on the chat. I will answer them after I finish the presentation. So just give me a second. So it's important to start simple. All right. Now, it's like a human. A baby needs to be able to crawl before it walks and before it runs. Okay, so we start with crawling, then walking, then running. So we cannot start running when we are born. It is the same with analytics. We need to get used to things before we start moving to more complex things. Okay, now, data analytics does not require advanced technical skills. Most of the data analytics. Some of it does require advanced technical skills. Most of it doesn't. So we can start actually doing simple things, and 80–90% of the auditors can do it. It takes a specific mindset and some skills that take time to develop, but they are not advanced technical skills. So it's better to start with simple things. Like, let's say if we're looking at payroll, and initially we can start something with excessive payments to employees. Just a single data set, a table with all of the payments over a period of time per employee. And then we can just filter the ones which are above a certain area or we can sort and filter, but it's a fairly simple operation, and we can show business value because some organizations and some payroll managers are concerned with it. Now, once we've done that a couple of times and people have seen the output during one of our audits, the next stage we can do something a little bit more complex. That will be something like employee vendor bank account matching. It's a fairly basic accounting control. I used to teach accounting information systems here for 5 years in one of the universities in Brisbane. And this is what we were teaching in the course. Employee vendor bank account match. Normally, we don't want to see bank accounts which are present on the payroll system and on the vendor system. Sometimes there is a good reason for that. For example, some organizations, when they send somebody on a business trip, they have to refund them the money for daily meals or things like that, or accommodation. They don't do it through the payroll system, they do it through the vendor system, and they register the employee as a vendor. But those transactions usually have a special flag so that we can filter them out. But otherwise, we don't want to see I'm having, or my wife is having a company, she's one of the vendors, I'm one of the employees, I'm approving the checks for that company or the purchase orders, and it goes into the same bank account, fairly basic control that can catch these things. But again, now it requires it is a little bit more difficult because it requires 2 data sets. We need to get the data set of the employee bank accounts and the employee identifiers, and we need to get this data set of the vendor bank accounts and vendor identifiers, and then we need to link these two and find the matches. So I wouldn't suggest to anybody to start with that. I would suggest, unless you have some sort of database skills, in which case you can do it easily, but I'll suggest to start with simple things. Now, that thing about employee vendor bank account matching, there was a case here in Brisbane about 8 or 9 years ago, where there was a guy who was fairly senior manager, finance manager in one of the companies, and he was approving the invoices to his own company. Or he was a paid employee, he also had a company, same bank account, he was approving the invoices, and we're talking here, I think it was about $20 million over 13 years. So some of these things actually can grow quite a bit. This is another benefit of data analytics to mention. This is more on the intangible side, but some fraud specifically as an activity is not an event. Fraud happens over a period of time. There is a report called Report to the Nations issued by the Association of Certified Fraud Examiners, ACFE. You can look it up online. It's available free, Report to the Nations. You can see the data. They run it every 2 years, so there is data on fraud there. And the median duration of a fraud is about 14 months. That's the median. And actually, some of the frauds go for years. So data analytics, because we're looking at the whole population, data analytics can help us identify the true picture and catch every possible fraudulent occurrence. Because it's not a problem for us to look back, not 6 months, it's not a problem for us to look back 20 years. Once we develop the routine, it just takes a little bit more time. Instead of 5 minutes, maybe 2 hours to run it over the records for 20 years as opposed to the records. So that also, this is another tangible benefit, just as an aside. But going back to simple and complex, basically start with simple things and then add additional things. So employee vendor bank account match is one of those. If we want to raise the level of complexity, then we can eventually, another example is something which is the 3-way match. For those of you who come from accounting background, probably you're familiar, but this is purchase order, invoice, and delivery docket match. Now we need 4 data sets. There's one for invoices, one for purchase orders, one for delivery dockets, and one for vendors. Linking those is not trivial. So if nobody on the team has done any analytics before, doing something like that is a no-no. If we're looking at accounts payable, I'll probably have a look at excessive payments to vendors or excessive refunds to vendors, something like that. but not the three-way match, which is a complex exercise. So just keep that in mind. Basically, walk before you run, and slowly, some people on the team will develop the expertise to be able to run more complex analysis. Winners and losers. Now that's an important one. So it's very it's critical to not everything that you are going to develop as an analytical routine is going to be extremely useful. Some of it will not be. Some of it will age. Audit analytical routines tend to age, and some of them are not as useful 2 years down the track as they were at the time when they were developed. So all of these things need to be considered. So sometimes it's important, not sometimes, but when that happens, it's important to identify which routines are still valuable, which ones are not, and not use them. I'm not saying just remove them, just put them in some sort of a dormant state. Do not run them very often, or run them instead of every 6 months, maybe you want to run them every 2 years. Some other routines you want to run every 3 months. So identify the winners and the losers. The winners are the ones that provide business value. The losers are the ones that provide no value or provide less value, but they still may become useful at some point in the future. You don't know. And since they have already been developed, don't throw them away, don't delete them, just leave them there. You never know, they are not taking up much space. Document them and forget about them, and focus on the winners. So this way, you will be actually looking at the values in, at the areas in the business where audit analytics can add the most value. The other thing is, no matter whether you are using continuous auditing or not officially, you can do it unofficially, because once you develop a routine of a process, there is nothing to stop you from running that routine every quarter or every 6 months. You don't need to wait for the next time that audit will pop up in the audit plan. Maybe set aside during the yearly audit planning, set aside some time, like every audit plan that I've seen sets aside some time for ad hoc work, because ad hoc is nature of life, right? We cannot predict everything, and we set a certain percentage of that for us to, so that we can respond to situations. Maybe in addition to the ad hoc, set a small percentage for just repeating some of the analytical routines that have been developed. Because this way, you will be catching potential problems much earlier and acting on them. The other good thing about it is the publicity that comes with that. I'm a big fan of actually telling everybody in the building, so to speak, that audit is running analytical routines over such and such process every 3 months. Just the fact that there is an oversight, and we actually let everyone know that we're running analytical routines over 100% of the records, will stop or minimize any potential fraudulent activities to a great extent. So focus on the winners and run them more and more. Leave the losers there. They can be useful in the future, and you never know. You can, at some point in time, you can use them to provide some additional value to the organization in a way that you cannot predict at the moment. So this is the end of my presentation. This session is based on a free ebook. If you want to get the book, just send me an email to, this is my email address on the screen. I'm happy to send it to you, or scan the QR code to connect with me on LinkedIn, and I will send it to you again. Just send me a message after that. I'll stop my presentation. I'll have a look at the questions. Can we have the PowerPoint? Yes, I will send the PowerPoint to Tatmina. Also, have you implemented continuous auditing for payroll via ADP? No, I haven't via ADP. I have implemented continuous audit for in-house enterprise systems. I've over SAP, over Oracle, over Alesco, some of those. Now, what I'll suggest, and I know about ADP as a system, but I haven't worked with ADP. Now, the thing is that you need to speak to the vendor and see what sort of access you can get to the backend. Some vendors are quite happy to provide you with some links. Some vendors, no. But some vendors actually can push, and I have done that with vendors for other systems. Some vendors can actually push the data out, the data set to a location where you can pick it up, to a secure location where you can pick it up and analyze from there. Now, it is not the best case scenario. The ideal scenario is to get as close as possible to the source. Having said that, this is the next best option. So if you cannot get directly access to the database, sorry, to the backend, just ask the vendor to push it out to you. Which brings me to another point. When you are, no matter what you do with continuous auditing specifically, or any data access, do not, even if you have access to the backend, do not pull data. And when I say pull, do not initiate the transfer on the audit side. If this is the system, the enterprise system, and this is the audit system, do not start the transfer on the audit side. Always ask the infrastructure teams to push the data. They need to initiate the transfer. It is very important because if you are pulling, it is very likely that at some point in time, no matter what you have agreed, that you are going to do it at 2 o'clock on Sunday morning or 2 o'clock on Saturday morning when there is nobody working and blah, blah, blah. Every week, one of those Saturday mornings, there will be some sort of a backup or upgrade or some other operation which is done on an ad hoc basis that you don't know. And your data transfer, or your pulling the data may impact that, and you don't really want to impact the production system, whether it's payroll, whether it's finance, whether it's any of the other systems. So when you are accessing data, always ask the IT infrastructure people to send the data to you. I have been in situations where people offered my team access to the backend of the payroll system, and we said no, but it's read-only. Yeah, I know it's read-only. I'm not saying that we're going to destroy information. That's okay. I'm just saying that we can impact the operation of the system, which is just as bad. So basically, I told them, we are going to develop the scripts for you, so that you don't need to do any work. We'll develop the scripts, just run them on your side, because you know what other tasks are happening on that system, what other maintenance tasks are there. We don't. So just keep that in mind, pull versus push. Always never pull, always ask the IT team to push it. So they can push you the data, and once you have the data, you can just go through standard analytics process. Import it in some sort. Personally, I have always, for continuous auditing, I always look at implementing a database of some kind. My preferred one is Oracle, but whatever works. Organizations usually have blanket licenses for Oracle or blanket licenses for Microsoft SQL Server, so whatever you have, just ask for an instance. They are free because usually there's 100 licenses that the organization purchased and only 50 are used. So ask for one of those. When you get the data, just keep accumulating the data. Do not destroy it after you've done the work, because actually that would help you with any forensic work in the future or with any other type of analytics that you don't want to alert the IT people, because sometimes you don't know where the fraud or the issues may be. They can be within the IT infrastructure team. So what you need to do, so accumulate the data, and this way you always will have the data set at your fingertips. Any other questions? No?